Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening, ladies and gentlemen. Welcome to the Smartkarma Weekly Forum. I'm very glad to be hosting you today on this call. Just a quick reminder, the forum is meant to be a high-impact weekly session that's exclusive to Smartkarma Plus subscribers. We use this to discuss some of the best, highest conviction insights surfaced across the network. A little disclaimer. The forum is meant purely for informational purposes and it does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. So please do not share any of the information on public forums without express permission. Another reminder, every week we go over 3 ideas, typically a small cap, a large cap, and a core thematic. It can change from week to week. We also take time to go back and revisit some of our prior ideas and provide important updates. Recordings of past forums are uploaded to our YouTube channel called Smartkarma Plus Weekly Forum. We do that so in case you've missed the session this week, you can always revisit it at your own time and pace. And you can also share these with your friends or with anybody else that you would like to consult before investing in such ideas. So what are we looking at today? Well, first off, we will look at Shenzhen International. This is a Hong Kong listed company. Second, we will look at Kimberly. This is a fairly unique Singapore-based asset. It's a hidden play on Singapore's reopening. And lastly, we will explore Fushan resources, the core thematic being energy security, coal prices, and the value that Fushan brings to the table. Okay, so let's start with Shenzhen International. The ticker is 152 Hong Kong. The market cap is $2.5 billion. It trades about 5 million a day. And as you can see from this chart, the share price has fallen quite a bit from about $13 all the way to about $8.5. But we've been sort of quite bullish on it and have become even more bullish recently. Osbert Tang covers this stock on the platform, and Osbert has looked at industrials in China for about 20 years. Okay, so quick introduction. So Shenzhen International, or SZI, it is the main government-linked company in the Greater Bay Area. It is at the heart of the transformation of the Greater Bay Area, and it's involved in pretty much all the major sectors that are behind the growth of this particular region. It is structured as a conglomerate. It has a stake in Shenzhen Airlines, where the ultimate parent is Air China. It has a successful logistics business, and it also has stakes in toll roads. So why do we like it here? Well, first of all, the logistics business at SZI is growing very, very quickly, both within the Greater Bay as well as outside. Because of the nice recurring earning stream that comes from logistics, Shenzhen International has been able to grow and invest in other key areas. Today, the stock is trading on 10.5% dividend yield. This is quite sustainable, and less than 0.5 times price to book. Let's quickly move on to the platform and see this a little bit closer. Sorry, 152 is the ticker. Okay. So, this is the particular insight that we're referring to here. And I think, the key things to note are contained here in the management update and outlook section. First of all, this is extremely important. So the management of Shenzhen International are about to embark on a strategy where they take these logistic assets that are very stable and generate recurring revenue and inject them into private funds or REITs. This will unlock a lot of capital for the business, and that capital will be paid back to minority investors in the form of special dividends. Secondly, Shenzhen International is in discussions with Air China on how it could restructure its stake in Shenzhen Airlines. Now, several options could be considered. They might sort of transform from passenger to cargo. They might maybe even look to divest the stake to Air China, but either which way, we know that there is some change coming here, and that will be for the better. The third is Shenzhen International is, rapidly growing its port assets. As you know, Hong Kong used to be a very important port, and that is starting to change. And Shenzhen International, I think, over time will become the most dominant company here. So, if you are bullish on the development of the Greater Bay Area and the transformation of the Greater Bay, then Shenzhen International is probably the best way to play that. If we look at valuations, we've explained, this is trading on a 10% yield. It is trading on 0.5 times price to book. It has tremendous amount of hidden assets and catalysts ahead. The stock is very beaten down, but it has been base forming for the last 6 months at least. And it has actually outperformed the declining market year to date as well. So that's the main thesis. Now, before I move on to the next idea, just a little reminder, you can drop in questions using the Q&A tab on your Zoom app at any point of time. Alternatively, you can post discussions on the platform and the analysts will get back to you directly. Okay, our second idea today is Kimberly Limited. The ticker is KMLY space SP. This is a $400 million market cap company, so it's a small cap. It's listed in Singapore. And as the subtitle suggests, this is an undervalued reopening F&B play in Singapore. Okay. Quick background, so Kimberly is one of the largest coffee chain operators in Singapore. They've been at it for over 30 years. It has started from that local coffee shop and has expanded into restaurants, food courts, and more, but still majority of its business centers around suburban, very, very local coffee shops. The business has been growing very nicely. You can see on the right-hand side, at least going back to 2014, very, very secular growth in revenues, profits, and margin expansion. The margin expansion was fairly dramatic last year in 2021, which resulted in a net income really exploding for the company. What's important is, the discipline. This company has consistently generated positive operating cash flow and free cash flow, and also has a dividend yield north of 5%. So what's interesting is, as a lot of you might be aware, there were sort of soft lockdowns in Singapore for quite a long time. You could not go out and eat in large groups. As that has been relaxed from end of March, we're starting to see crowds come back out, people sort of sitting out, eating, masks are no longer required. And that is obviously very, very beneficial to Kimberly. On the risks, higher raw material prices could impact this business. Having said that, this company has shown remarkable ability to raise prices and pass it on. And really, Kimberly is, as local and suburban as it really gets. So there is defensiveness to that business model too. And of course, the cash position of the business, the cash flow generation, all of those things are added comfort factors too. So Kimberly, if we go to the platform very, very briefly. Okay, so another thing to highlight is the closest peer of Kimberly is a company called Kofu. And Kofu had more exposure to food courts. And just a few months ago in December, actually, Kofu was privatized. So that highlights kind of the value that exists in Kimberly at the moment. There's also been some interesting changes, and you can see that in this discussion on the platform. So very recently, the two founders of the business, the two directors, they were asked to step out. This was linked to a transaction that they failed to disclose properly. After they left, they tried to come back on as consultants to the business, but the interim directors did not like that. The shareholder vote was rejected. So, these particular shareholders, what their plans are now could be very interested. If they are feeling a little bit frustrated or disgruntled by the turn of events, we could potentially see another privatization or some sort of a PE-backed MBO, because the cash flow of the business is so strong. I think these would be easy transactions to engineer. But we'll find out in due course. And meanwhile, you can see from the chart, the share price has pretty much been flat since August. So it's clearly not baking in any sort of reopening here. Moving on to the third and final idea today. This is Shougang Fushan, 639 Hong Kong, with a market cap of $2 billion. The stock's done well. This was actually presented last year at one of our earliest forums. At that time, the share price was around $2.20. So, patient investors and Smartkarma followers would have had the opportunity to make a little bit of money here. But if we look at the shares here, Summit in Asia highlights that Shougang is really swimming in cash. So let's see why. Again, first things first, Fushan is a producer and seller of coking coal. So coking coal is used in the steel supply chain. Coking coal profitability of the business has gone up remarkably. They are now making greater than 2.6K renminbi per ton based on the current prices of coking coal. Last year, this was about 2,000 renminbi per ton. Meanwhile, it's extremely cheap. It's trading on just 2.6 times PE, not even 1 times EV/EBITDA, and a 22% dividend yield. Yep, I'll repeat that, a 22% dividend yield. They also have a net cash of 6.7 billion Hong Kong dollars. So, if you do the math, we're talking about 800 million US. That's 44% of the market cap. So if you assume, maybe 2.5 thousand renminbi per ton pricing for the rest of the year, at the very least, this can trade up to, $3.50. But of course, on top of that, you would be getting a generous dividend as well, and that cash buffer supporting downside. So interesting idea. Commodity names are doing really well. This is really under the radar, and a net cash business at below 1 times EV/EBITDA and a 22% dividend yield. Well, that's not something to scoff at. With that, I'm at the end of today's forum. Unless I get any questions in the next few seconds, we'll call it a wrap. I'm going to wish you guys a blessed Easter, and we will touch base next week on Thursday again. Have a good one, everyone. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching, and see you next week.